We got the jobs report, and it was a blowout jobs report. It was 254,000, and the experts are now telling us, based on the jobs report, we are now going to avert a recession. It's not going to happen. We're going to have a soft landing based on these numbers. These are such reliable numbers. This proves it. This proves that we're going to have a soft landing. Poppycock. Numbers are so manipulated. Getting these numbers that are overestimated, and this is all the numbers since January of 2023. We've had the numbers reported, and then we get a first revision, a second revision. They get sharply revised lower. Happens over and over. Making some changes, trying to make it not look as bad as it did because of the reporting. But again, you can't trust these numbers. March of 2023 to March of 2024, they had missed by 818,000. They're now trying to make it look a little bit better. And again, they say figures don't lie, but liars sure can figure. It's just ridiculous. But now it's being proclaimed right in time for the election. Miracle, a blowout jobs report, 254,000. I told you this was going to happen. I told you that we would likely get that I believed that we were going to get a rally based on the jobs report, which we did, and we saw my signals flip back to bullish. Momentum signals flip back to bullish on Friday. I thought that was going to happen earlier in the week. I told you that we were overdue for revisions back up to the upside, which we're now getting with the previous reports. They're being revised upward. I told you that was going to happen. I told you the unemployment rate would probably drop back down. Miracle. All the experts and all the media come on there and tell us how great the economy is. We're about to move into recession. Yet they're telling us that we're going to avoid a recession, that we have averted a recession based on fake numbers. Absolutely incredible. Know that the uninverting of the yield curve is telling us we're about to have a recession in the next 3 to 6 months. We know that the SOM rule being triggered with the unemployment rate, which, again, this is also part of the jobs data, but the unemployment rate is already predicting, the 3-month moving average is predicting we're about to have a recession in about 3 to 6 months. It's a reliable indicator. But yet, based on fake numbers, we're being told that now, no, the recession's been canceled. Not going to be a recession. We're going to have this soft landing. This proves it. Absolutely incredible. When we have numbers that are so off, does anybody believe this number? I don't. Predicted we would get a good jobs report. I predicted we would get a rally. I think the S&P, this is starting the rally to the final high. About my last video, I'll link that in this video. I went through the momentum signals are turning back to bullish. Again, I think we're going to play up. Now, the wild card is tensions in the Middle East. Happens sooner rather than later, then all bets are off. We could get volatility surrounding that, could terminate any rally very quickly. So we just have to be paying attention to that. But my signals did turn back to bullish on Friday. I told you I thought that we would get a rally with the jobs report. I told you I thought the jobs report would come in strong, and it would be a catalyst that would take us higher. It did. I thought the jobs report here, just ahead of the election, would be a good number. Do you also believe that eventually it will be revised downward? Because I have complete confidence that we are getting numbers that are being overestimated and, again, sharply revised lower after they're initially reported, the initial reading, and revised down later when nobody's looking. Most people don't look at the data revisions, and they just look, hear the economy's humming along, and they just hear the initial report, and they don't hear about all this. Just more bogus numbers that will likely be revised down later. My guess is that they will. I don't believe this number. I did predict it would happen, and I did, earlier in the week, I talked about it at great length of detail. I told you what I thought, and I told you I thought we'd get a rally with it. Both happened. We got the rally with it. We got the good number. I think that's going to complete the diversions on the S&P 500. And if you want to see, talking about the diversions, if you didn't watch my video earlier in the week, I'll link it at the end of this video. So go take the time to watch that if you didn't see that video already. Important stuff about to happen. All you got to do is look all over the media and the financial media and social media. And again, everybody's saying the same thing. Oh, this proves we have a soft landing. Fake numbers that we continue to see being proven as fake numbers, overestimated, now proves that we're going to avert a recession, proves we're going to have a soft landing. Absolutely incredible. That's what's being said. Now, we were supposed to have 150,000. That was the estimate. It came in at 254,000. Again, media celebrating a blowout jobs report. The best economy in history. 254,000 higher than the 159,000. Again, there was a revision back upward with that. I told you I predicted that would be the case. We also had it for the previous month. Revision upward. Overdue for that, so I thought it would happen right before the election. We had an estimate of 4.2%, which was supposed to hold steady with the unemployment rate. Told you I thought that would likely come in better, even if it ticks down, which it did. I told you, even if it does tick down, told you earlier in the week, the unemployment rate is already predicting we're going to have a recession. Too late. It's already predicting it's going to happen, but 4.1% ticking down ever so slightly. We had the longest period of the inverting of the yield curve, meaning the 2 years higher than the 10-year. Now we get the uninverting of the yield curve, the steepening of the yield curve, predicting we're about to move into recession. That's the signal. Steepening of the yield curve may go back into negative territory. Oftentimes it will, maybe not right here or immediately, but before the recession hits, oftentimes it will go back, and yield curve will invert again and then turn back to positive, and that's really kind of a warning sign. It doesn't always do it, but oftentimes it will. We're pulling back down here. We see that happen again surrounding the market top. Possible. It's warning us, hey, the uninverting of the yield curve on September 6th, to have a recession. We're being told, oh no, rates are normalizing. The snake oil that they're selling. NASDAQ's going to go fill the gap at 20,400. They guess S&P will move higher, but then I think we could get volatility. Now, again, we'd be wrong about continuing. We don't have to fill the gap. Just as we will. We'll likely do that next week, and by October 15th, I think we will likely have that gap filled. Are predicting a recession is about to happen. You know, the dollar broke out of the downward trend line. It back tested. It broke this trend line back to the support zone and the 200-week moving average, and now we get the dollar rallying up 2%, breaking the multiple week losing streak, bouncing. It is topping. The dollar is bottoming. The financial crisis, the market collapsed and the dollar soared. Sold off in 2022. The market sold off. The dollar soared. Huge warning sign. The back test of the broken trend line is now done. The divergence is now starting to play out on the RSI. Over the summer, we saw the SOM rule triggered, moving above, moving average, moving above of the unemployment rate, moving above low over the last 12 months. 0.5%. It's still, even with this report, it's still 0.5%. The moving averages. It doesn't have to be. The signal's already been triggered. A recession is about to happen. Jobs report, the moving average of the unemployment rate. We get this jobs report, visions upward, the unemployment rate ticking down, and 254,000 jobs created. So that is telling us we're not going to have a recession. Well, guess what? This is telling us we are going to have a recession, and I'll believe this reliable indicator any day over fake numbers that are being reported. Numbers, and I say that we're getting these numbers and they're being sharply revised downward. Showed you the numbers. Anybody believe the number that we got Friday? Well, apparently, I guess, experts in the herd do. People that look at this stuff and look at the jobs report in a serious way and clearly see the numbers have been way off. So I believe these signals, the uninverting of the yield curve, I believe the SOM rule, these signals have a proven track record of being correct. And the experts are doing what they do at every top. They did this in 2000, 2001. They did it in 2007 and 2008. And I saw, no. It's going to give us a soft landing. And again, it's just a bunch of fairy tales. Positive note, the port worker strike has been suspended until January 15th. Apparently they reached a deal on wages, but there are other issues that they're still hammering out. So again, going to be negotiating that January 15th. That issue is off the table now, and the port worker strike has been suspended. Issues, tensions in the Middle East, we know. We know that Israel is saying they are going to respond to Iran's missile attack, and that could impact energy prices. If energy infrastructure is targeted with the oil refineries and so forth, and this is an issue to be paying attention to. We could see a response at some point next week by Israel, running October 7th. Maybe they wait. Yom Kippur is on October 11th on Friday. See a response before then? Do we see it surrounding October 7th, or do we see it after Yom Kippur? We'll see what happens. Bulls are turning back to bullish on the S&P 500. Can they remain that way? And again, if tensions in the Middle East heat up, if there is a response by Israel, could terminate the rally at any time. So do keep that in mind. Geopolitical issues, rattle markets, could do it for a little while. There could just be a knee-jerk reaction. It could be. Sometimes markets ignore these things. Sometimes markets bottom on these things. I think we're going to see a top, but again, this could be something that rattles markets. Be a delayed response. Will there be an immediate response here going into next week? We'll be watching to see what happens. Could be an issue that moves the market, especially if we start seeing oil begin to surge. Oils are starting to turn back to bullish. I still think we got a little bit more time, but Israel could respond at any moment. Just simply don't know. We'll be watching to see if it happens immediately or if we buy a little bit more time. Again, I think those divergences can complete on NASDAQ and S&P for a lower high to fill the gap on NASDAQ and to fill the gap, creating a lower high diverging with the S&P as it moves higher to the target levels I've talked about. Again, I'll be linking my previous video over the weekend from Friday into this one. If you want to see those charts, follow the link at the end of this video. What I'm talking about the gap fills and the divergences and my signals turning back to bullish as we predicted. Earlier in the week, we would likely try to rebound and get a rally. Signals turn back to bullish with the jobs report. That happened. I told you I thought that would be the case. It happened because I thought we'd get a good jobs report right before the election. But now I'm going to be looking for a divergence to complete at a good shot that it could happen by next week. We know that Israel has vowed to respond to the missile strike by Iran. We know the missile strike was ineffective. We know most of the missiles did not reach their intended targets based on Israel's air defense systems. But we know Israel's going to respond. It's probably going to be a powerful response to send a message. And that's something that could rattle markets, so we just need to be paying attention to all of this. It could happen at any time. Now, again, signals are turning back to bullish. If they remain that way, then maybe we buy a little bit more time. There is a possibility that they do a response surrounding the October 7th date when they were attacked a year ago. Shortly thereafter, they do it and wait. Know that they delay, but maybe they do it Yom Kippur. But this could impact markets at any time now. This could impact oil prices. That could rattle markets. So just be paying attention to this issue. Be paying attention to this stuff. Geopolitical issues sometimes rattle markets. This has risk of doing that because of concerns about a regional war. This happen next week? Very possibly. Happen sooner than later. May do it on October 7th. They may wait a little bit longer. They may wait until after Yom Kippur. We just simply don't know. But just pay attention to this because it's probably going to rattle markets. It's not just this issue. Again, the market will eventually begin to price in a recession.